Alex, really interesting conversations then that have been had amongst investors in the run-up to this. We spoke to one of them a little earlier, Aberdeen Standard's Andrew Millington, and said who was interesting because he was drawing our attention to the fact that this is not a profitable business, and so it was his concern around the status of workers at the business, and if rules change with regards to the status of those workers, how able is the business to cope with any change to its business model in that regard? And that seemed to be a really important point when it comes to thinking about the Deliveroo future.
It's a strange, tussle at the centre of this company because there's so much invested in it now politically because the UK is planning to introduce new listing rules which allow dual-class shares, make it easier for SPACs, various other proposals. But at the same time, there is likely to be regulation coming down the pipe which looks at gig economy, the ability of companies, whether they actually employ their riders and drivers or not. And so at a political level, there was likely to be a tussle between wanting to show the UK is a success for tech companies or a good home for tech companies, but also then wanting to ensure that people are protected. And it looks like the investment community is looking at what's coming ahead and saying the risks of that regulation are far greater than any will built into the desire to have great successes on the stock market.
Yeah, we see, Alex, Deliveroo is actually halted now due to volatility as it fell by 20%. It fell by more than that at the start. So we're seeing those shares now halted in London. Let me ask you about where this conversation around listing tech companies goes then in London, because as you point out, the rules are changing. And I wonder where that will leave us. Because one of the other concerns that Andrew had earlier was the percentage of a business that a founder owns versus the percentage of the votes that a founder has. And that might be very important to founders. It can stand in the way of their ability to raise money from other investors, though. And I wonder, when we see rules change, how in step or out of step with the rest of the world will London be?
So I think this gets to the very heart of the issue, that just changing the rules isn't enough. There needs to be a change in attitudes within the market. If we look at the US, we see any number of tech companies listing with dual-class stocks. Obvious ones like Google, Facebook and indeed Amazon, who they're controlled by their founders, even though they're in a minority of the economic interest. Investors are willing to back that in the US. In the UK, the rules are going to be that you can have dual-class stocks for 3 years, which means you have access to the capital available in the public markets, but you have some protection against unwanted takeover approaches, for instance. To me, that seems like quite a good thing and brings us in slightly further in line, but in a rational way with what is done in the US and indeed in the Netherlands. But it still means that in the long term, we are not going to have companies controlled in perpetuity by the founders and their families.
Do you think the conversation running up to this IPO would have been different, Alex, if we were talking about a profitable tech business? Because when we are not, there is then the concern about what happens when rules change, regulation changes, and the threat that brings. When you are very profitable and people write unfavourable things about you from an ESG perspective, and I'm thinking of some big tech names in the United States, it doesn't seem to stick to investor sentiment so much.
Yes, I think you're quite right. That Deliveroo, as opposed to Child, was always going to be a little bit problematic. On the sort of a year and a half ago, it was making the case that it would go under if it risked going under if it wasn't able to get an investment from Amazon when it was still in essentially venture capital funding. Clearly, the lockdowns changed that narrative because it had a huge number of people ordering from home. But this was not a company that is a sort of champion dominating the market. It is in a very competitive market space with a not entirely clear route to profitability, particularly if those regulatory headwinds arise. Now, there are other companies that might have been more attractive, but have decided to go to the US because they have less pressure to be profitable in the near term. They're able to list through SPACs. These are things that the UK wants to change, but I think we've seen now from the Deliveroo experience that it's going to be a tricky road that is not answered purely by rule changes.